a proposed rule that everyone is looking at that could effectively amount to a ban on Bitcoin. And that'll be voted on by the European Union parliamentarians within minutes this morning, with the outcome very much undecided. The Parliament's Economic and Monetary Affairs Committee will vote on a draft of the proposed Markets in Crypto Assets Framework, the EU's sweeping legislation package for governing digital assets. The draft contains a late edition that looks to limit the use of cryptocurrencies powered by the energy-intensive computing process known as proof of work. All right, and joining us now to discuss is Kevin O'Leary, chairman of O-Shares ETFs and co-host of Shark Tank. Welcome, Kevin. Great to see you. All right, so this Markets in Crypto Assets Bill vote is coming to the EU Parliament. There's some nuance. The language in the bill is not a proof of work ban per se, but the language is enough for some EU committees or agencies to eventually write rules to make things tough for miners. Can you weigh in on these environmental concerns amid a potential ban of proof of work?
Well, regardless what happens in the next few hours on this European vote, the pressure remains the same around ESG and Bitcoin mining. And so when you think about this, even Biden's executive order last week discussed climate change inside the order. That was a direct swipe at Bitcoin mining because it's very energy intensive. Now, having said all that, that's not going to change the outcome in any way. Bitcoin's not going anywhere. It's going to remain a very valuable digital asset. How it's mined is going to change. Let me explain. Number one, currently, many financial institutions and sovereign funds who are not permitted to own coin directly use public mining stocks as a proxy. If you look at the value of a mining share of a public company like Hut 8 or Hive or Marathon or Riot, which were heavily institutionally owned till very recently, is that they trade in accordance with the Bitcoin price because many of them keep their Bitcoin awards on their balance sheets and grow their asset value. Now, after Biden's decree, and exactly what the Europeans are voting on here, there's an objection to the amount of energy being used to mine these coins and have them awarded. That's basically the problem. But there's a solution to it, and it's what I call the Norway model. There's a new large facility being built right now, a company called BitZero in northern Norway, that is using excess hydro energy that's already existing and not being used at all on dams in far north in the Arctic climate, massive 300 gigawatt facility being built. The largest shareholder is a sovereign wealth, because they actually have two solutions. Number one is they want to own the coin, so the company's keeping it on the balance sheet. But my point is that power is available at 1.9 kilowatt hour in US dollars. 1.9 cents per kilowatt hour. And it's not being used for anything except now mining coins. So the community there, 3,000 people, is employed. They're using the stacks to create hydroponics and grow tomatoes, and a canning plant has been built beside it to provide food for that region. And it is a way to actually integrate Bitcoin mining with a community that wants it there. It would solve the problem the EU is trying to ban. It would solve the problem that Biden is discussing in his executive order, and in fact is going to become the new model for Bitcoin mining. It'll emerge in places like Quebec, where hydro is available, upstate New York, Montana, and indeed all of these facilities are engaging this new idea because there's not going to be a need for a carbon audit. The biggest problem Bitcoin miners have now is they say, well, we're 56% or 60% compliant with ESG mandates, but they have to survive an audit. There isn't a single audit firm that will sign that because they know the tracking error on carbon credits is so large, it's unauditable. So at the end of the day, we, if you want to call it we as investors, have to find a new model, whether you talk to the Europeans, whether this vote goes well or it doesn't, whether Biden's issue is going to be dealt with. The future of Bitcoin mining is sustainable, clean energy, period. And the Norway model is the way to go.
Mm-hmm. It doesn't look like this ESG debate will go away anytime soon, Kevin. But I also want to point toward some other legislation. We have Senator Cynthia Lummis of Wyoming tweeting that it's been a long time coming, but my bill to fully integrate digital assets into our financial system is almost ready. I'm putting the final touches on it with some key advocates and partners in the Senate, but watch out for an unveiling soon. So I understand you've also had a chance to read this bill. It's the Responsible Financial Innovation Act, I believe. What are some of the highlights in your view?
So first of all, number one is this is one of the few bipartisan activities going on the Hill right now. I went to Washington last Thursday and met with the senators, 30 of them that are both interested in crypto for their jurisdictions, but also working together on a bipartisan basis. You know, that's pretty rare right now in Washington. So the bill contemplates a lot of issues in it. There's an industry copy available. I have it here. I've read it. It's over 160 pages. And it discusses a lot of initiatives to get some agreement on this from both sides. And this is the beginning of policy, which we all want. Everybody wants policy. So it talks about stablecoins. It talks about Bitcoin mining. It discusses national security. It talks about which regulator should regulate what. This is all good news. Now, it's not going to get done anytime soon, probably not until after the midterm elections. But the fact that we have an executive order and the fact that Lummis's bill is making its way, grinding its way through a bipartisan edit process is really, really good. And so I encourage this. I'm definitely going to stay involved. And I think as an industry, we can finally embrace the idea that Bitcoin isn't going to be, or any digital currencies, legislated out of existence. It's going to be regulated. And that the reason that's great news, even if you're a purist, even if you're a decentralist, the good news is this allows a massive amount of capital from institutions to come in to cryptocurrencies. They've been held back by the fact that we have no policy. When policy comes in, you'll see $1 trillion move into this market. And I believe eventually we'll become the 12th sector, the S&P. This is the beginning stages. I think it's very bullish. There's a lot to talk about. And this bill from Lummis doesn't even contemplate NFTs. And that's more work we have to do because that's a very fast growing sector. But the whole point is this is financial innovation. It's being dealt with. It's being addressed. And many senators on a bipartisan basis are interested in having this in their states.
First of all, welcome, of course. You mentioned bipartisan basis. Do you think that this is, taking a look at the list of some of the people you met with, it leans very Republican. Do you think that the lack of equality in terms of the equal amount of Republicans and Democrats that are either supporting it or interested, et cetera, do you think that that might be a hindrance? Even if Republicans win the midterms in 2022, do you think that not having it truly bipartisan makes it harder for it to get through? It becomes a partisan issue and becomes something that could get hurt if things swing the other way 2 years after that.
You know, I learned something when I was on the Hill. In that room was Dick Durbin sitting right beside Ted Cruz. It doesn't get more bipartisan than that. And, you know, the fact that they were, peppering me with questions about, and they're doing this with many private investors. I think it's a very healthy thing to do because they're asking me how, I invested in this and what my premise of investing was and what I could and couldn't do from a compliance point of view. And, I urge them to make policy first on cryptocurrencies and second on stablecoins because they're tools in every investor's quiver, and they seem to be listening to this now. And so I'd argue that there's a lot of interest in it because they know it's not going away. When you see a stablecoin go from 2 billion to 50 billion in 18 months, in the case of USDC, that's serious money. And still you don't have institutions in it yet. Still you can't get auditors to audit it. So we need this policy. We need it. Yeah. And I think they figured that out.
Yeah, what would you like to see done with stablecoins? Because obviously this is, it's quickly becoming one of the hottest stories or most important stories in crypto next to Bitcoin itself. How would you see it regulated? Would you see it regulated? And if so, what kind of best practices would you like to see legislators put forth?
Well, what I urged the senators to think about stablecoin as no different than a money market fund. We regulate money market funds. We determine which assets can back the money market fund. We don't want the fund to break a buck. We don't want a stablecoin to break a buck. And so these rules are already in place and have been for decades for money markets. It's simply a matter now of deciding how much and which assets should back each stablecoin. Now, if you want to make it dollar for dollar, then you're going to have to put FDIC insurance in place. But all of that's fine. It really, to me, is about taking what policy exists today and applying it to this new form of currency, because really, stablecoins are another form of money. And once those policies are in place, and what I urge the senators to consider is make it competitive. Let 4 or 5 or 6 of these licenses out there so we can have multiple options, just like we have in money markets. I can buy a Fidelity money market. I can buy a Schwab money market. They have slightly different nuances to them. Let the market compete. But the reason to do this, which I think really made sense to the senators, was this allows the American dollar to remain the reserve currency globally. If you tell me that you've regulated a USDC or any other stablecoin backed by the US dollar, it's going to be used as a payment service all around the world. And that perpetuates what we all want, the US dollar to be the standard. And I think that's a very good reason for them to continue pushing this policy forward. And I think most of them get it. Even if they didn't grow up in a crypto world or study a lot of it, they understand the value of the dollar being reserve currency. It's the reserve currency for oil. Why shouldn't it be for crypto? And it will be if they do policy on stablecoins. It's coming. The momentum is really starting to build, and I think it's good news for all of us that invest in this space.
Kevin, there's also a section that talks about taxation as well as securities, but specifically on crypto taxes, since we're in tax season right now. I wonder, anything significant jump out in you, how it addresses capital gains and makes it easier for people to report their taxes in crypto?
Well, I think with regulation comes taxation. That's for sure. And that's okay. I pay my taxes when I trade stocks and bonds. I'm willing to live with it. What we're missing, when I stressed when we were having this discussion exactly the way you posed the question, is we do not have the compliance infrastructure built in yet. So it's very difficult right now to connect your crypto trading to your desk, your compliance desk, that then can mark to market your positions each day. But, you know, Sam Bankman-Fried's looking into this for FTX, Binance, the same thing. We're trying to build that infrastructure into the larger institutional trading platforms. And they're addressing, they're part of this discussion on the Lummis Bill. And everybody gets the joke on this. We've got to be able to actually have the reporting fit into the existing compliance infrastructure so we can pay our taxes. And we need our auditors to sign off on our statements so we can comply and file with the regulator. I think we can get all this done in the next 18 to 24 months. And I think the value of getting all this done is that it builds into what we already have. Right now, for my trading desk, for my compliance department, I have no way except hiring 3 people to actually take tally of every trade so that we can stay compliant and show our statements on gains and losses and yield or staking to our auditors in a way that's auditable. And that's the work we've got to get done. So in the end, and I think this is what everybody should think about, Bitcoin is not a coin. It's software. Ethereum is software. Solana is software. Avalanche is software. Helium is software. It's all software. And we should embrace this innovation, invest in this innovation, and lead it here in both development and compliance and policy in the United States. Once you do that, it becomes the global standard. And I think the senators get that. I think they get it. And I think they want it, and they want this to stay domestic, and we need policy. So all of a sudden, it's moved up the feeding chain on the agenda items. Nobody was even talking about this just 3 months ago. And look at where we are now. Every news outlet is talking about it. We're talking about it now. This is important. What we started our conversation with the EU vote, which is going to come in a couple of hours. What I think is going to happen there is basically nothing. They don't want to stifle innovation either, but they're pushing this ESG mandate, which makes the Norway model the new way of mining. We're going to have to use hydro, nuclear, wind, and solar, and the industry is willing to do that. Unfortunately, the early adopters, the early public mining companies, in nascent industries, this happens. They get the arrows in their back. Their stocks, PE, are going to compress as these new companies like the Norway, like the BitZero go public, and institutions can buy their shares. That's okay. There's nothing wrong with that. But they're reacting to this ESG mandate all around the world, whether it comes from BlackRock, Biden, or now the EU.
So, Kevin, I was going to ask you how you would pitch this to Senator Warren and Brad Sherman, but since we're short on time, I got to ask you about your home and native land, Canada, how it treated its truckers and what it dealt with, and how it dealt with their Bitcoin donations. What are your thoughts in general about how Trudeau has handled the Bitcoin and crypto, the donations aspects, et cetera, and how it dealt with the truckers? And also, if you have any picks here with the conservative leadership contest that's happening, since you considered throwing your hat in the ring a while ago.
Been there, done that. Won't do that again. However, to address your issue around Trudeau, Trudeau is a very successful politician. He is a terrible manager. Now, in Canada, it's the parliamentary system. The whole idea of being prime minister is to try and find individuals, men and women with talent in each of the mandates, in finance, in the environment, in procurement of military, in medical. And he has been an abysmal failure on that regard because he's never done this before. And so the Canadian people have suffered badly. He's a very, very poor manager. But the cavalry is coming. There's good news. Jean Charest recently threw his hat in the ring last Thursday. I've publicly endorsed him. He has a long track record of executional skills, and we need someone like that. Canada desperately needs adult supervision in government, and it's coming. As a Canadian taxpayer and a citizen, I'm also Irish, I'm also Emirati, I can compare how these countries are operated. Canada is the richest country on earth run by idiots. And that's a really damning statement. And I don't mean to be disrespectful, but it's time to make a change there because the country has every resource the world wants. It's a very, very wealthy country, but it's poorly managed. And so if we can, for example, Canada is one of the richest countries on earth for oil, and we can't even get it to the East Coast because Trudeau was never able to deliver on the pipeline. He bought it for the Canadian people for $4.5 billion. And then just trash the project. That's just bad management. That's bad leadership. What he did to those truckers is outrageous. I mean, that's just completely wrong. It's almost immoral. It should be illegal and it should be challenged. We don't do that in a democratic society. You can't, that's just wrong. I would expect that to happen in China or now in Russia, but not in Canada. And so the Canadian people aren't going to forget that. We have a leadership race and then probably an election within 24 months. And finally, we can help Trudeau find a real career. I don't know what it's going to be, but it's not running Canada.